I'm the tax manager at Neil Jasani Advisors, and we are a team of CPAs, tax attorneys, and financial planners who work together to create the most tax-efficient, holistic strategies for our clients' unique situations. The purpose of these short videos are to answer some of our clients' most frequently asked questions regarding their personal and business tax returns. So let's dive right into today's topic: business meal and entertainment deductions. When can I deduct 100%, 50%, or when am I precluded from deducting anything? So let's see here. All right, so in 2017, the Tax Cuts and Job Act made a few changes to the IRS code in regards to business-related meals and entertainment. Unchanged, however, is clients of business prospect meals. They are continuing to be tax deductible under the Tax Cuts and Job Act, subject to certain limitations. However, deductions for expenses related to activities generally considered entertainment are no longer allowed. However, also some exceptions are built in to the Act. If you'd like to check out the most present changes here, it's going to be in Notice Section 274, and this is the most up-to-date information in regards to how business meal expenditures can be deducted. So I'm going to go back to my PowerPoint here. All right, so under the Tax Cuts and Job Acts, business meal deductions are allowable up to 50% as long as the expense is paid or incurred during the taxable year for which it is being claimed, and it falls within an ordinary and business expense related to the specific trade or business. So ordinary means it's common and accepted within the industry. Necessary, it's helpful or appropriate within a specific trade or business. Also, the expense must not be lavish or extravagant under the circumstances. So there might be times when you could go all out and you could spend a ton of money. It depends on the circumstance of the particular event and how it relates to your business or trade. There's a couple other requirements here. It also requires that the taxpayer or an employee, an authorized person of the taxpayer, is there during the service of food or beverages. This prevents employers from gifting meals to either prospective clients. They really would like to prevent that from happening by allowing this 50% deduction, provided that the taxpayer themselves or one of their employees is present during the food or beverage service. So the food and beverage must be provided to a current or potential business customer, client, or similar business contact. Can't just be your next door neighbor treating him to something under the preclusive of having a business meeting. That won't necessarily pass muster here. Also, if you are commingling meals plus some entertainment, for example, hot dogs at the Super Bowl, you really must either purchase them separately, have them on two separate invoices, or have the cost recorded on a bill, invoice, or receipt that shows that separation. If you don't have a receipt, you're not necessarily prevented from taking the deduction, but you need to make a written note of all expenses immediately after the event. When all of the facts are fresh in your mind, that's when you need to make that recording. Here, so as we're talking about documentation, if you like to remain audit proof as far as business meals deductions, you want to keep all of your receipts. You want to show the restaurant name, how many people you were entertaining there, but by providing them food and drink. The itemized list of food and drink is very helpful. And you want to also include the reason for the meal, the names of the clients or the prospective clients. Any amount of documentation that will robustly back up your claim for these deductions is what you need to be keeping detailed records of. Just showing a credit card receipt is not enough. You have to substantiate it with specific facts. Oh, so after COVID and, the government was really trying to encourage consumers to go and eat in restaurants and for people to start spending money again on food, they provided a new rule at the end of 2020, which allows for a 100% deduction of business meals, as long as the expense occurred in either 2021, 2022, and the food and beverages are provided by an IRS-defined restaurant. So it could be dine-in, takeout, or delivery. It can't be something like a grocery store, a drugstore, or a liquor store. Those types of stores aren't really catering to something called immediate consumption. You don't have to necessarily pay the restaurant directly. You can order through DoorDash or Grubhub, or, as long as you're able to show that this was a business expense that was made for the purpose of trying to gain a new client, or taking care of an existing client. As long as you have this documentation, you will be able to claim this deduction, as long as it's an IRS defined restaurant. So here's some examples to just kind of bring this to light. So here, a client meal that you don't attend. Well, obviously, because of the one requirement, you would get to deduct 0%. Again, my previous example, Super Bowl and a hot dog. If you don't notate it on the receipt and separate it, you're going to get that 0% deduction. But if you buy them separately and you notate it, you're going to get 50% deduction for the hot dogs. And let's say you go out of town on a business trip and you go stock your hotel room fridge. You're only going to get a 50% deduction because not all of that food is necessary or intended for an immediate consumption. Same scenario with food bought from Costco just to stock the break room. That differs from food for the break room that's ordered daily basis, like bagels and muffins and stuff. Those are intended for immediate consumption, so they would be allowed under that 100% deduction allowance. Here, obviously, food ordered from the IRS defined restaurant, 100%. I hope that is clear. Per diem, it's actually kind of a different way than doing a deduction, and it's a lot more complex and usually does not provide the best expenditure. So per diem, the rate changes pretty much every year. For tax year 2022, per diem is capped at $56 a day. 2023, it's going up $3. So here, employers that are issuing that per diem, they can only deduct 50% of it. So the maximum deduction under per diem rule is $28 a day. However, if the employers choose not to issue the per diem, they can deduct the 100% of actual business expenses. All right, so let's talk about entertainment. Well, as I said at the beginning, the Tax Cuts and Job Acts eliminated the business deduction for entertainment expenses. So you can't, you can't deduct any expenses related to taking your clients to a golf tournament. You also can't deduct any expenses for renting out a gymnasium or some other place to have an entertainment event. You also cannot claim any sort of deductions for dues, memberships, anything owed to a golf club or anything like that. Again, here I'm going to point back to Section 274. That will show some allowances that are not to be made. All right, so when can we deduct 100% of entertainment expenses? Well, you're probably thinking, well, you said that we can't. However, that's only related to business clients and prospective clients. If you're going to treat your employees to something of entertainment value, you're going to deduct 100% of those expenses. Some events that would qualify, but this is not an exhaustive list: holiday parties, picnics, bowling alleys, something like that. As long as it's for the primary benefit of the employees, which means that 51% or more of the benefit is going to employees. And when I say employees, I'm going to mean someone who's not making over $135,000 a year. They don't owe 10% or more of the company, and they're not related to someone who owns 10% or more of the company. That is the IRS guided definition of employees for this expense deduction purpose. Again, we're looking for ordinary and necessary expenses. You need to write down what it was for, how much it costs, and it really needs to be on a first come first served type basis where no one can be discriminated against based upon their compensation or ownership or anything like that. 100% of employment entertainment expenses are deductible related to events that you can treat your employees to. So here, just to kind of recap, so we know how the two are intertwined and how they are different. Meal expenses, in addition to entertainment expenses, they need to be ordinary and necessary, not lavish or extravagant. As far as meals, 50% deduction for clients and prospects needs to be documented. 100% deductions for food and drinks purchased for immediate consumption from defined restaurants. And you must pass, all the same tests. You must be there. It must be for a business purpose. All right, entertainment. Entertainment expenses usually not deductible at all if you're related to clients and prospects, but 100% if you're relating to your employees. If you're taking your employees to an outing on a golf course, you're going to get to claim a 100% deduction for those expenses. However, if you're treating a prospective client to a round of golf, that's a 0% write-off. So I hope that you've learned something about meal and entertainment expenses, but nothing in this presentation constitutes investment, tax, or legal advice. Corporations and individuals are encouraged to seek guidance of their own personal legal, investment, or tax counsel. If you would like to learn more about Neil Jasani Advisors and how we're helping our clients, please visit our website at neiljassani.com.